Hello traders, welcome to your technical update for Friday the 6th of March 2015. I hope that you've all watched the fundamental video as it gives a bit more detail on the fundamental reasons behind the New Zealand falling and the Euro. Now, I'm on the New Zealand right now on the daily chart, and as you can see, this downtrend right here looks like it's going to remain intact, and we're going to start to look for the next move lower. Now, if I zoom in for you, you'll see this is yesterday's daily candle. It's a very significant candle. It's a big move, and it signals that momentum has definitely shifted and the sellers are in the market. The reason why they're in the market is due to the new policy that the Reserve Bank is looking to employ to try and curb their housing bubble. Now, how can we make money from this? This is the uptrend that we've seen, and we've been focusing on this double top, and now we've definitely got a signal. I put a trade potential idea out last night on Twitter. If you got that, you'd already be in the trade. However, let's look at whatever we can do now if you missed out. So we've definitely broken the trend. We've taken out the major low. We've taken out the 75 cents. We've now bounced, and we're looking for resistance. It just happens that resistance at 75 cents, support here is now going to become resistance, and we could continue the leg lower. I'm happy to buy at these levels, put my stop loss up there, work out the risk and how many lots I can trade as per my equity management. And I'm looking, considering this is the daily chart, I'm looking for a much bigger move lower, as this policy, should it be implemented, will continue to hamper the growth of the property market, which is the only performing asset in the New Zealand economy. It's quite an interesting policy, and it will be also interesting to see whether Australia adopts it as well, considering they're even probably in a worse shape in terms of potential property bubble. And it's a way that they're going to try to manage things without using interest rates, which is the common method. So I'm quite happy to start short selling this at 75 cents and looking to go lower. We'll see what happens. We might be able to get in a little bit higher. The best way to trade this would be to get in now, and potentially you pull a Fibonacci and you might be able to, and like it might pull up a little bit, but I doubt it due to the strength of the 75 cent area. We'll have to wait and see what happens in the European session. The Australian session, we also seen the completion. We've got a bearish candle. It's not as bad because we didn't have any major policy change in the government for Australia, so therefore it wasn't sold off as much. And we do have a completion of a 3-candle pattern here, and a falling star pattern has been confirmed, and we're now into the next session, and we've had a little bit of a bounce in the Australian session, but I think that we're going to run into resistance at very close levels to where we're at now, and it could be another shorting opportunity. Momentum isn't going to really start to jump into this pair until we break support here at 77.5. There's a lot of stops and a lot of orders placed here. So when we break through it, I think momentum will kick in and the Australian dollar will stop this range-bound motion. But you might be able to scalp it between now and then down to these levels, and the only reason it's going to break down here is if we do get a surprisingly good non-farm payroll with US dollar strength. Otherwise, I'll just be scalping this, and you might be able to potentially do a scalp breakout trade and then look to do a more longer term next week. It's up to yourselves, but there's a trading idea for you that's not too bad, but as you can see, we're still in this sideways band. As soon as it breaks down below here, you can expect to get some more movement. The Great British Pound has been falling out of this wedge that we've been noting for the last few days, and we're starting to see it look to find support. Now, off these levels that we've had support before, which are also resistance, we could potentially have a bounce here. So this is an area of quite interest for myself, and it'll be interesting to see what happens. I don't think the market is going to, as you can see, the market price action here is also quite speculative on what it wants to do at this point. There's a lot of indecision, but there's also coming down, testing the water, and then rejecting the $1.52 area. So a break of this would definitely indicate we're going to go lower. However, if we do get a weak non-farm payroll, this could be the opportunity for the US dollar to relieve some of its strength and the pound to catch up, considering the pound economy is not going too bad. And I think it would be the biggest gainer out of all the pairs should we have a weak US dollar, along with the Canadian dollar, of course, as well, because it's also in the good books with the market right now. So there's a potential opportunity. If it breaks out below $1.52, you could do some shorting and pick up a few pips. If the non-farm payrolls weak, I wouldn't be surprised if it come up and test $1.53. But for now, there's not a lot of trading I could do right where it sits. It's in the middle zone where it wants to tell me what it wants to do. The euro, at 11-year lows, it broke down. We had the ECB last night. It was quite eventful. The market rallied quite heavily on the back of his polished statement, but when it came to Q&A time and the details came out, the market sold off heavily. It dipped below $1.10, which is this big magic number all the media is talking about, and then it sucked back up. The market rejected it, and now we're hovering and waiting to look for its next move. You could pretty much say that the highs and the lows is going to be a channel range, and a breakout of these will help dictate what the overall momentum of the market is, now that it will have had enough time to digest what Draghi said. And is the flooding of $60 billion a month of buying bad debt going to continually weigh on the euro, or is the market going to focus on his positive comments that the quantitative easing is showing signs of actually working? So that's something to keep an eye on, and I think the downside is probably the likely outcome, a breakout, but we'll wait and see there. Canadian dollar still within this range. A big non-farm payroll result could push it outside of this, but it's going to have to be a shocker, either to the good, break out to the high side, or to the bad and take out the lows. Otherwise, we're going to remain within this range. I don't see another trading opportunity there. I just want to see it break out. For those of you who are scalpers, well, then you'll have your own little systems for inside there, which there's many ways to skin a cat in a range-bound market. The US versus the Jap still grinding higher, and it looks like it continually wants to go higher. Now, that's on the back of the US dollar strength, as I've been mentioning, and I wouldn't be surprised if we continue up. It's going to come down to non-farm payrolls. Anything below 200,000 jobs is going to be bad, and we'll see this sell off. Anything above 220, I think 220 to 240 will be seen as quite positive, and anything above that will be, above 250 will be seen as outstanding, and away we go. So we'll have to wait and see what happens there. I'll just drag in here. We have the US dollar index charts just been grinding higher. Of late, we've had this range that we broke out of, I've mentioned, and we're just grinding high. We've opened up much higher here today, and we've also had a turn up of the MACD cross. So it still looks like it wants to, and we've still got plenty of room on the relative strength index for it to push up. So it looks like it still has got the possibility to go higher. We'll have to see what non-farm payrolls has for us, and we can go from there. I don't have too much else in terms of trading opportunities. The best thing to do is match a strong pair with a weak pair. Right now, the Great British Pound is a strong pair, the Canadian dollar is a strong pair, the US dollar is a strong pair. The Euro, the Australian, the New Zealand, and the Japanese are all weak, and we'll try and make some trades off them. So until next week, trade well. Keep an eye on Twitter. I'll be posting information on there about the non-farm payrolls. Have a great weekend and trade well.